you can now see. Thanks, Jim, and also thanks to Joe for the perfect pronunciation of my surname. This was possibly one of the first times ever. In what way can accounting save the world? I know that I wanted to be a bit provocative with this question. So I do not know whether accounting can save the world, but I think it can create the conditions for saving the world. And the reason for that relates to that most of the social environmental problems that we have are related to the production of services and goods and the externalities that this production generates, and they are also related to the distribution of the value that the production and that the production of services and goods allows. Think about inequality. It's all about how the value that corporations generate is distributed amongst, for instance, capital versus workers. Now, accounting, although many people tend to forget this, I guess, and there are reasons for forgetting this. It's a wonderful framework to understand how services and goods are provided, what inputs we have, so what production factors we have, how we account for those, and what values we generate, and how we distribute this value. But we tend to forget that, and I want to, before we go into the possibility of regaining a bit of understanding of how production and distribution of value can become part again of the current discourse and debate on environmental issue, I want you to reflect on the current structure of the income statement. This is very likely the income statement that you will find when you open the financial reports of every single organization or corporation. You will have revenues on top, you will have the cost of goods sold, gross margin, then the functional expenses, R&D, general and administrative expenses, operating income, the result of the management of the finances and the finance function, then net profit. Now, the question I would like you to reflect upon is whether this is an income or a political statement, and this is also a provocation, because in a sense this statement is drawn in the interest of one very specific stakeholder, which is the shareholder. Not many people know the history of this format of the income statement, and not many people have been exposed to different formats of income statements. When I was an undergraduate student, I studied 6 different income statements because each one may have a different purpose, and so how you structure that space, how you structure that data visualization, in a sense, produces certain visibilities of what we do and makes other things opaque and absent. And so this is one of the barriers that we have. And the history of this income statement is quite interesting. It emerges when the business starts to be functionalized, so divided in. Oops, let me put this chart on this screen. When the business starts to be organized in functions, and so you have manufacturing, you have marketing, you have research and development, and when the management started to become separated from the ownership, and it signals that everything is done in the interest of the owner, who delegates the management of the firm to functional managers who have the purpose of maximize profit in the interest of the shareholder, and that became with time the purpose of the organization. So the entire organization now is about maximizing profit. It's also interesting, but this is an aside, that This also explains why auditors are paid by the auditees, because at that time there were a few important shareholders. Think about the Rockefellers, think about the Agnellis. They want to make sure that the results that they see are valid and correct, and therefore they take some of their profit to pay the auditors in their own interest, not in the interest of the public. So this income statement has a long history, and I wonder whether it is an income or rather a political statement. So it tells you more about the kind of political arrangements that we witness in economies and societies rather than the calculation of profit. Now, as I said, this is just one of many. There is another one that we could look at, which speaks directly to the production and distribution of value, which is the results of those, which is what generates those externalities that the economists talk so much about when you manufacture a watch, or when you manufacture a Mac, or when you manufacture your computer. Of course, there are externalities, but these externalities are not considering the notion of profit because they are not part of the purpose of the firm. Now, there is a different way of accounting for this production distribution of value. And this is the way where you start from revenues, you still have the cost of production, but you then highlight the wealth that has been created. So through manufacturing, through financial activities, through investment activities, and then you calculate how much wealth has been created. And then you discuss how it is distributed, not distributed to shareholders only, but to employees through salaries, to providers of interest-bearing capital like banks through interest, to the state through taxes, because most of the activities that we do, and including productivity, I would say, just talking to some things that Bart said yesterday in the Financial Times. It's true that productivity relates to the firm, but it is also true that some firms are more productive than others because the state offers a series of infrastructure that allow firms to operate more productively than others in other geopolitical contexts. So the state needs to be remunerated for the services that it provides. The firm, because the firm becomes the institute or the institution where all these different stakeholders negotiate how much of that value that has been generated needs to how that value that's been generated needs to be distributed, and of course then you've got the shareholders as well through the dividends, and so you've got production of wealth and distribution of wealth. Now this takes into account that process of production and distribution of value that generates externalities, which are environmental issues, but also social issues when you distribute your value, but also when you organize your supply chain. So accounting is very well versed in understanding these processes. Now, the proposal that I have, and this is what I would like to discuss with you all today, is a small but important modification to this notion or to the structure and format of income statement. So what happened, or what would happen if we add a small line to this income statement? Here we've got all the various stakeholders. We consume natural resources and natural capital, but I don't see nature on the distribution of these resources. What about if we add a line, a small line? Lines make a difference. So we add a small line, which becomes a provision to a fund for nature. This technically, in accounting theory terms, is of course possible. You do provisions for risks. You do provisions for all kinds of things. You want to make provisions to make sure that in the future your firm becomes resilient and can deal with pandemics and things of that kind. But unfortunately, with the idea that accounting, with the recent, I would say, idea that accounting has become about representing the truth and representing exactly how transactions are, we have lost the possibility of actually reflecting on what the activity of corporations and organizations in general generate, what side effects, what unintended consequences they have. And so how can we regain that ability of accounting to make you reflect on your activities? I think that this provision would be one of those possible technical solutions, because the first thing that it would do is to make nature a stakeholder with no voice, but a stakeholder that needs to be heard, and someone has to give voice to nature that does not have voice. It also solves a series of other problems that I've witnessed in the past, I would say 20 years. There is a lot of debate on environmental accounting, social issues, ESGs, and all of this mushrooming of metrics. But this mushrooming of metrics, it's always beyond finance. It's never linked to actually how we produce and distribute value. I always say, it's very nice to be environmentally friendly when you do this without taking out of your pocket any money. While here, by making this provision, these other human stakeholders will have to discuss and agree how much actually are we willing to give up of the remuneration that we get to reconstitute the natural resources that we consume, and how can we do that? So it prompts a conversation about our relationship with nature, the relationship of humans with non-humans, with non-human stakeholders, including animals, nature as a true core, I would say. The second thing, it would recognize the destruction of natural capital and the need to give back to nature in order to reconstitute its natural capital. Companies could even decide to have this line at zero, but that, of course, will prompt the question, why do you consume natural resources and you do not do anything in order to reconstitute the natural capital they are burning in the production of services and goods? And the other thing that it will do is that it takes away that I would say quite sterile debate on what the purpose of the corporation is. This year, I think, is the 50th anniversary of Freeman, very famous and impactful, for reasons that we can discuss, statement on what the purpose of the firm is to generate profit in the interest of shareholders. Well, there are other traditions, including the Italian tradition of management, that would not consider that the purpose of the organization or the purpose of the corporation. In fact, in the Italian tradition of management, the corporation does not have any purpose. Only individuals have purposes, and the firm constitutes the institution through, or the space where these different interests are mediated, where the tension and the conflicts between capital and labor, between the state and the corporation, between nature and the activity of human beings have to be discussed and mediated. Paradoxically, the only way in making all of these different interests equal is to make sure that the corporation is seen without any purpose, because the purpose will be constantly renegotiated in the preparation and discussion of the accounts. I think there are other things that we can discuss during the Q&A, but I would possibly stop here so that we actually have time. So what I would say is that accounting can save the world. Indeed, it can. There are, I think, good. There are possibilities for accounting to at least create the condition for the salvation of the social world, but also of Earth, our planet. So I will stop here, Jim. So I wanted to keep this very, very brief and open up the conversation.
Okay, thanks, Paolo. I think it's actually really fascinating how you kept that really what's a very complex in many ways concept into one simple chart, and I thought it was very effective. The immediate question I have actually is how you calculate that amount on that nature on that chart there. I mean, how do you go about thinking about how you're going to calculate that?
Yeah, that is a negotiation. This is what I said at the beginning. This change in the structure of the income statement modifies the purpose of that statement. That statement is not about measuring. That statement is about reflecting on what we do. Is about making us reflect on what the purpose of the organization is, making us reflect on what impact we have on nature. We can have that, as I said, we can have that line at 0, but it means we don't care. We can have that line at the level of the dividends that I distributed last year, and I don't want to distribute this year because I think we need to give back to nature. It can be in agreement with the state a substitute for taxes. It's a provision. It's not a measurement. It's a speculation about the kind of risk, the kind of activities that we do. There is one thing that also, a couple of things that are interesting. The first one is the etymology of the word rationality. If I write this in the chat, I hope that the others can see it because I'm the speaker. But if I write rationality in this way, I hope that those who are listening to this talk will see the word in a completely different way. Ratio in Latin, so rationality comes from ratio, which is a Latin word. Ratio in Latin doesn't mean reason. It means two things. One is proportion. So to be rational means to be proportioned. You don't want to maximize profit, because if you maximize profit, you create tons of externalities. You destroy the planet. You make lots of inequalities. You have to be rational in the sense that you want to be proportioned. Balance is a key to wisdom. There is a wonderful book by Kay or Kay, I don't know how to pronounce the name actually. Joel Kay, I think, is the author, who is about the history of balance and how history of balance is a key to wisdom. The second thing that ratio meant in Latin is not ratio, but it is account. So account as a symbol of being proportioned, as a symbol of being balanced. And the second word that is quite interesting is speculation. Speculation, it has become, I want to speculate, I want to make money. But actually, if you go back in history, speculation was at the core of the accounting technique as an instrument to look at yourself into a mirror, because speculation comes from, again, Latin speculum. And in the first accounting treatises, there was this statement: look at your financial reports as if you're looking at yourself into the mirror, and ask yourself whether you're a decent human being, whether you're a decent civic being. So speculation, that was something to stop and make you reflect on what we do when we produce and distribute value, has become speculation. I don't even care about what I do when I produce wealth, when I become richer and richer. So yeah, so it's a shift from measurement to using data to actually reflect on what we do.
Yeah, because I think it's sort of the specifics, of how that amount is calculated or worked out is obviously an important element, which we'll probably come back to, I'm sure, a bit later. Just apologies everybody for there's a slight crackle on the line today. We hopefully you can still hear what we're saying, and apologies if you're for the crackle, but I think we're all used to these events, and they unfortunately sometimes there can be on a crackle on the line. So these obviously very really interesting concepts, Paolo. I just wondered to what extent they're gaining traction. To what extent are the firms and people you speak to thinking, yeah, these are ideas which have value. They have, they really, are of interest to us. What are you finding from people you speak to about these ideas?
Yeah, that's an interesting question. We can go back to the issue of measurement, by the way. So we can discuss this with the participants. So in terms of whether these ideas are taking traction, I think some of these have already. So in a sense, in Latin America, for instance, or in Germany until very recently, and some companies still do. They do report with value added. The idea of nature is new, and so it will take a bit of time to also understand from a technical point of view what that implies, and whether it needs to require a change in the accounting framework of the IFRS, for instance. And this brings me to the institutional dimension of this change. When I say that the income statement is a political statement, this is exactly what I mean. Measurement is never something that is not impacted by political discussions and negotiations. And I don't mean political in the sense of politicians. I mean the relationships between lobbies, corporation, the political body, parliaments, and things of that kind, which is part of the normal democratic process, I would say, that we would have in defining what counts. And while before what counted was profit, it is quite clear that now what counts needs to be different from profit. Just to give you an idea, yesterday I was invited to speak at the event with representatives from the European Parliament to discuss about we can account for nature. And this is a quite elegant and simple solution that hopefully will get some traction. But this is also, we are here also to understand what the problems for making this solution real will be. And I'll give you a short example of how the institutional environment is quite important when you want to make innovation succeed. Does anyone know how many years it took for the light bulb to become the standard, since it was clear it was more effective, more cost efficient, more cost effective, and more secure than gas electricity, or the gas and light in the streets? It took 40 years, because of course there are interests behind the illumination of the streets with gas rather than electricity. Different kinds of companies, different kinds of lobbies, different kinds of interests, and it took 40 years to shift from one technical solution that was already efficient, ready, safer, for that technical solution to actually become the standard. And so to change the standards take time, because the standards are always political.
Yeah, and in terms of that question I put to you about gaining traction in companies, organizations, I guess also what's important is it beginning to gain traction in regulatory authorities? Do you find that are these ideas, other people, the various regulatory bodies we have, are they sort of aware of these concepts at the moment?
Yeah, I'm lucky to have a couple of projects which have been sponsored by the ICW and CIMA, AICPA, which are about, first, the Natural Capital Coalition, the capital coalitions, and these are exactly about trying to understand from a technical point of view what kind of changes needs to be made in the regulatory framework. So I think that the accounting bodies are interested. I think that the policymakers are becoming interested in that anecdotal example. I said, being invited to talk about these things in front of members of the European Parliament is an example. I think that people are desperate for a solution, and there is no solution. This is a possible solution. It is a relatively easy solution. I don't want to say there is a solution with no problems or unintended consequences, but it does solve certain problems that we have already witnessed in the past few years.
And what makes you say that people are desperate for a solution? Is it because of the world we're in and the challenges we face? Why is it that people are desperate for a solution to this?
Because I think that I would agree with those who say that the window for making changes is shrinking. Just another anecdotal example. I'm from Sicily. I'm from Palermo. This year I went back to Sicily after a year for the summer, and it is the year in which the highest temperature ever recorded in Europe has been registered in Sicily, 48.8 degrees. The changes have to be urgent. People are aware of the fact that we need to be quite quick in finding ways through which, rather than talking about the environment, we actually do something about the environment. And doing something about the environment will cost. And if it is true that the corporation is the engine of the production and distribution of value, it is clear that the corporation has to do something, and the stakeholders that rotate around the corporations have to do something, and have to do something by putting their hand in their pockets, not to expect that someone else will do that for them, not to expect that someone else will solve the problems for them, not to expect that by measuring carbon emissions, we will solve the problem by itself. It's by understanding how carbon emissions are produced, by looking at the supply chain, which is the upper part of the value-added statement, that you actually open up a debate about CO2 emissions.
I'm glad you mentioned that, because I was going to, you've almost preempted to my next question, which was get back to this point about measurement. And obviously, we already measure carbon emissions, and some might think, well, isn't that enough? Why do we need to go further than that? I think you almost sort of part answered it there with your reply. Just before you do that, reply to that question, Paolo, again, just back to our discussion about 10 minutes ago about actually how this will work, just for the benefit of everyone in the audience, including myself, as to how this actually would work. I mean, how will the transparency be achieved, in relation to other areas like social inequality, sustainability, etc.? How will actually that work?
We are now used to the fact that corporations prepare the financial reports and push the information out to us. And this is why you've got auditors who want to or were asked to check the validity of that information. I think that model has to change. And so it's not just pushing information, but it's actually co-creating the information that the financial reports generate. The General Assembly is the obvious place where that should happen, where management prepares the accounts and opens up a space for discussing whether these accounts are correct or not, whether these accounts reflect the purpose that collectively we want to pursue by participating in the process of producing and distributing value. And from a technical point of view, when we make provisions for risks, you calculate provisions for risks. When you make provisions for nature, you look at your value chain, you understand how your value chain destroys natural resources by looking at your purchases, for instance, and then understand, okay, I've destroyed 100 million of value related to nature. I need to do something with it. I know that in producing my cars, I'm producing CO2 emissions. I will have to plant some trees. And these things will have to be discussed, because of course there is no one single way through which you can reconstitute natural capital. There are many different ways, and these are a matter of rationality. Reducing carbon to emission will have some other consequences and trade-offs. It's like the example of the electric vehicle. The other day on the Financial Times, there was this article stating maybe the electric vehicle is not as green as it seems. If we believe that CO2 is the only thing that counts for nature or for society, we forget that by producing electric vehicles, you've got mining. Mining has got some environmental implications, but also some social implications, because not always working in a mine is actually a nice thing to do. Maybe the extraction of oil has got other externalities, but being in a mine with no protection as a worker in a developing country may be something that we want to balance with reduction of CO2 emissions.
Mm-hmm. Okay, let's take a question. A very good one's come in from Sally. Thank you, Sally. She asks, what are the categories you would measure for nature? So, for example, she gives this example here. If an organisation turned half their car park into a green space, how would you measure the value that brings? I like that question.
We're still talking about measurement. It is not measurement. Certain things are so complex that cannot be measured. It's a matter of reflecting on what we do, and so this is what this proposal is about: is to understand, as I said before. Okay, I want to manufacture plastic. In manufacturing plastic, I have certain kind of externalities that I can't measure. The problem with that, or the value of that provision relates to the items that you want to measure collectively, to understand how damaging your production distributional value is. That line is not a measurement; it's a provision. It's a different thing altogether. Mm. When you do a provision for risk, do you measure the future? The future is not knowable. How do you want to measure it? The only way in which you can discuss the future when you make provisions for risk is actually to collectively discuss how we see the future. And then the future tends to be different than what we thought it was. So when you calculate something that is not knowable, because nature is very complex, and it is a very ambiguous concept too. I mean, it is not easy exactly to understand what kind of externalities we produce. I think it's quite naive to think that we can measure everything. When you deal with this impossibility of measuring, then calculations becomes a form of governance. And this is why that income statement, because we generate a space of governance where the different stakeholders have to decide what they want to do with nature. Do we want to save it, or we don't bother because someone else is actually preparing tons of measures according to SDGs that will eventually save the world. We will save the world if we also understand that we will have to consume less. We will save the world if we understand that I will have to be remunerated less, because I don't need 3 new jackets a year. I can do it 1 every 3 years. And so I can be paid less because I want to protect nature. We've seen this with the pandemic. It's an anecdote, but I convinced my wife that actually 45% of the expenditure of our house are actually a waste. We could live with much less during the pandemic because we didn't do tons of things. Of course, not doing tons of things has got social implications, because it means not flying. And then what do you do with the airlines? It means not going to the cinema. What do you do with the film industry? It means not to buy clothes because you don't go out that often. And then what do you do with the clothing industry? It's a matter of balance. It's a matter of rationality. And so this is why that line is not about measurement. It's about wisdom. It's about judgment. It's about purpose. It's about the future. It's not about measuring the past. It's actually discussing what kind of society and environment we want to live in.
So that's when you say it can be provision. I could it also be some commentary around that? I'm talking about, an open sort of letter from the CEO, or what are we talking about? Text as well as numbers here.
You do need, of course, in the notes in preparing the reports to the General Assembly, and then when the General Assembly approves the reports, you need to explain why that was 0 or 20% of your value added generated. Mm. So, of course, you were to say, I've planted trees, or I've avoided to to supply energy from non-renewable sources, and therefore I can actually reduce the provision because I've already taken care of environment in the production of the value. And so that becomes a space for conversation, a space for disclosure. And what is even more interesting is that by not defining what needs to be measured, you get greater transparency, not lower transparency. And when I gave my inaugural lecture at Manchester, I made an example, which was calculation of, according to GRI principles, of the of a good meal in a restaurant. You can calculate you can define good in many different ways. They define good in terms of the average calorie intake of a menu. And so if you're eating a burger and you only have a burger, your calorie intake is very high of that in that menu. So if that menu offers only burgers, it's very high. If you offer a burger and a salad, that calorie intake goes down. Does this mean that we actually make people eat better? What it means is that we are shifting the responsibility to the consumers. Before I was offering you burgers, now I offer you a burger and a salad. It's your responsibility if you want the salad when you enter my restaurant or the burger. So measurement does not solve the problem. Discussion about what means to have a good meal solves the problem. Understanding how those measures are calculated solves the problem. Understanding the political battles behind the definition of good meal as the average calorie intake makes us to understand more, not less, about the world. So this idea, I have this paper that I think I don't know what, yeah, it's that one published in AAAJ that has been kindly mentioned in the chat by Joe, which talks about how believing in transparency makes you blind. Because if you measure only carbon emission, you will not see that in order to produce the batteries, you are increasing slavery, for instance. Or maybe that is not the case, but we need to discuss that, right? We need to have a debate about reducing CO2. What does this imply? A target and everything being aligned to a target does not generate a space for conversation, does not generate a space for understanding what a wise course of action is in defining what we want to do with our lives.
Okay, let's take another question, which is another very good one from Leonard here at the business school. It's quite a long question, so I'll break it up a little bit. He talks about how, I don't think you see it, Paolo, yourself, Birchall et al. In 1985, so discussed the rise and fall of value-added accounting in the UK. So his point being that this has been around for a while, this debate. And their main thesis was that we look at the social context in which accounting operates. And then his question is, how do you think the economic and social context in which accounting operates has changed since the 70s? And also, can the context be changed through accounting? So these are things we talk about. Yeah,
it is a very, very interesting question. Thanks, Leo. Because if you open AMBS, Accounting Organizations and Society, when that article was published in 1985 and 1980, there was another article. AUS was hosting a debate on value added, for instance. There were quite a few papers that discussed the possibility of reporting through value added. The fourth European directive gave corporations to report according to the model that we now know, or value added, and that disappeared in time. And it disappeared in time because we have been dominated by the idea of transparency, and we've been dominated by the idea that accounting should provide information for the efficient functioning of markets. But by now, we know that markets are not efficient. And so we know that we need a different kind of accounting. And this does not mean necessarily to invent something new. Until 1980, I would say, until the fourth European directive, accounting was not supposed to provide a true and fair view. It was supposed to provide an environment where you discuss all of these trade-offs, where you discuss the ambiguity of value. Every accountant knows that the profit is intrinsically ambiguous, because it is the result of hypotheses. It is the result of hypotheses about the future, but also results of how we have recorded the past and the institutional dimensions that defines those measures of the past. So, and Jim, actually, you started the introduction by saying measuring profit is easy, measuring environment is difficult. Measuring profit is quite complicated too. So it's not that now we've got this environmental problem and now, oh my gosh, we don't know what to do. We didn't know what to do even before, because value is a very difficult concept to measure. It's a very ambiguous concept. It's not only about cash that goes in and cash that goes out. It's all about what hypotheses you make when you make your reports. And so going back to Leo's question, I don't know, we will have to wait and see. This, of course, will relate to whether we are moving or not into a new phase of capitalism, and whether we are abandoning the idea of market as the mechanism through which the production and distribution of value is optimized, or instead we will go into a phase where there will be hyper market. And so think about the magic beliefs in blockchain to provide transparency, which in my view is a very naive understanding of what transparency is about. So I think we are at a kind of bifurcation, and so we could become even more market driven, or we can go into a different direction that takes into account the fact that the market, like every other system of allocating resources, has got some limitations, and possibly is time to go back to accounting, which has been for centuries the practice through which the production distribution of value has been managed. So not market.
Just to, then Leo also asked at the end of his another question, which was, are we destined, despite the lots of ESG initiatives, to get more accounting that prioritizes the shareholders?
I guess this is what I want to say with this shift in capitalism. It depends on where capitalism goes. So, and I would not even say will it safeguard shareholders more? It will safeguard the 0.01% of the shareholders. So that is one risk that I particularly see. And all the others, the common investors, will possibly not have the same say in defining how we measure the production distribution of value. So, but I think there is hope, because there is a huge need for change. If you keep doing what we're doing, we're doomed.
Yeah, just we've got just a few minutes left. A question I had, Paolo, was to further this debate that we've been having over the last hour, what needs to happen to sort of further it, do you think? I mean, is it these ideas, how are they going to be progressed from here, do you think?
Well, being measurement of political issues, it requires politics, and so it requires lobbying, it requires presenting ideas at conferences, it requires influencing policy and regulations. It requires university to become an active voice in these discourses about regulation, and it requires also that academics have a presence in these debates, and that others have a presence in these debates. And I think about trade unions. I think about capitalists in a good sense. I mean, because not all the not all the corporation is bad, and there are people working in corporations who are very well aware of these problems. But the current institutional framework, meaning the way in which reports with the IFRS, the way in which the policy-making process is defined, the fact that we've got a certain notion of auditing that is quite interestingly, I would say, compromised, because the auditor is paid by the auditee, and by definition cannot do the auditing in the public interest. And we can also discuss, if you want, what possible solutions we can have in the auditing industry there. All of these things need to change. It took a lot of years to get where we are. It will take some few years to change the current institutional framework. And the current regulatory framework. So it will not be that easy. It will take constant effort and debate.
And to what extent also do these concepts align with other issues? So, for instance, SDGs, Sustainable Development Goals, a lot of movement there at the moment in terms of bringing those more widely into the world of corporate reporting. Is there a way in which this can somehow be part of the same debate?
Yeah, this is what the CMA-ICPA is funding through this grant with Ariela Caglio from Bocconi we have, where we want to link the value-added statement for nature to the SDGs and create a space for understanding how, in pursuing certain SDGs, you have an impact on the production and distribution of value. Because pursuing the SDGs is not free. Reducing poverty means that someone else has to become less rich. You cannot make everyone richer. The resources upon which we live are constrained. The good thing that I take from the climate crisis is that we realize that we have only one planet, and therefore the resources are constrained. And at some point, we will have to reduce and change also the ideology of growth. We cannot grow indefinitely. We may actually have to stop growing unless you want to go to Mars and create colonies, which is what some entrepreneurs in Silicon Valley think. But with the current planet, I think the logic of growth has to be at least balanced in relation to saving resources rather than keeping consuming those. And the logic of growth is linked to economics and finance. It's not linked to accounting. Accounting is about rationality. It's about balancing. It's trying to be balanced, not to be imbalance. I want to grow. No, that is not what accounting was invented for. Maximization of profit and general equilibrium with that idea behind it is a big issue, I believe.
Yeah. We've just got a few minutes left, so if you have any questions in the audience, please put it in the chat now. We'll have time just to ask it. Just perhaps one final question I had was around are there dangers here of greenwashing? We've had a lot of debate about this over recent years. Are there dangers here that this just becomes another way to sort of,
Of course,
dodge the issue?
There are dangers of greenwashing with SDGs. There are dangers of greenwashing with the other initiatives. There are dangers of greenwashing with whatever you do. This is why we need to open a space for a conversation and for checks and balances. So that if the firm pushes information to me, I need to have other actors which have the ability and the possibility. At the moment, there's not even the possibility of questioning this data. At the moment, we just take this data face value because there are the auditors who tell us this is the truth. But we know that the truth is not something that is related to accounting. Accounting is about ambiguities. Every single accountant knows it. It's only those who do not know how accounting works that believe that accounting is about true and fair news. Fair, for sure. True, not really. When I teach my students, Leo mentioned that Bachelor et al. Paper. They have a paper where they explain the different metaphors that accounting can play in organizations and society. So it can work as an answer machine. like Oracle. You interrogate the Oracle, and the Oracle tells you invest, not invest. And that is the only metaphor that in practice never works. And I tell my students, accounting can do many different things. It can be a platform for mediation. It can raise questions. It can help you to explore the future. The only thing it cannot do is to give you answers and represent reality, because it was not invented for that purpose in the first place. When the accruals were systematized in an accounting treatise in 1636 by a Jesuit guy, in the preface of that book, he said, accounting is a pragmatic science. It's not about truth. I'm not a theologian.
Mm-hmm. Well, for those of you who don't know Paolo is a great historian as well as a great academic here. He does a lot, so he knows his history. So, well, I'm just conscious we've almost time's up, Paolo. We've put more links in the chat to the papers that various papers that Paolo's mentioned. So do copy those and have a good look at Paolo's work, which goes back many years in this whole field. I think it's been a really interesting discussion, this, because it's an area which I think a lot of people it wouldn't even cross their radar. So I think it's good that we've had this discussion. We're sort of trying to get the debate going about this, and be very interested to see how it develops from here. So can I just thank you personally, Paolo, for for your time today. We really appreciate you can pick up time with busy diary to join us. May I thank you, everybody who joined us for the discussion and listened in. I hope you've take something away from it yourself, and do please, as I do look at Paolo's work to read more about it. But thanks everyone for coming today, and we'll look forward to enjoy the rest of the week in terms of the various sessions. Thank you.
Okay. Thank you, Jim. Thank you all. Okay, see you soon.
Thank you. Bye now.
Bye.